Hey everybody, it's Daniel here from InfoRas. Hope you're all doing well. So, I was talking to a friend and we were just talking about rate cuts, the market expectations, right? Especially with all these central bankers coming out, right? The Fed, the ECB, Bank of Canada, and so on. So, I wanted to discuss basically a topic that came out, and it was the discussion about the consensus view in the economy, and that everyone has when it comes to realtors, when it comes to bankers, when it comes to the markets, right? We heard from the Fed, especially the U.S. Federal Reserve, come out and say that they project 3 rate cuts this year. We had the traders in the beginning of the year price in that there's going to be 6 to 7 rate cuts this year, and we see that being pushed away. We saw that markets were pricing in or predicting that there was going to be a rate cut in March. That was the cold water was thrown on that from the Fed, and looks like there's not going to be any rate cut in March. And when we look at the data, right, and we hear what the central banks are saying, especially when you hear from the Fed, certain members there, even the Bank of Canada mentioned this as well, that they're worried that first of all, they acknowledge the exuberance. They all call this exuberance in the stock market rally, right? And they acknowledge that there's exuberance in equities. They acknowledge that, and they can see that inflation is sticking around, and especially Bank of Canada. If you heard them, they said that if you look past shelter, inflation is still elevated, right? Same thing, similar comments from the Fed that they want to see more data before making a decision when it comes to rate cuts. We heard from also Bostic say that they wouldn't mind it wouldn't be crazy to do a rate cut followed by a pause. So the consensus view is that there's going to be 3 rate cuts. The consensus view is that they're probably going to be, easing happening by June of this year, June, July. And when you look at markets and you look at opportunities, trading opportunities, and especially when you're trying to profit off them, a lot of the alpha and the gain is made when you don't follow the herd and you don't follow the consensus view, right? And you actually go against the consensus view, and most importantly, you're right about it, right? That's the most important part, right? You can go against the consensus view and still be wrong, right? Like, for example, let's say you're trying to short Nvidia. Let's say you try to short Nvidia at 500, saying it's a bubble, and look where Nvidia is today, right? You try to short it at 600, 700, 800, it just keeps going up and up and up. Same thing, you try to short Bitcoin, continues to go up higher and higher, and so on, right? So it's this consensus view I want to bring up with rate cuts, that a lot of people feel that once the Fed starts cutting rates, we're going to be on this path of, aggressive easing, and everything's going to be fine, and soft landing is here. Look at the economy, look at the data, look at the inflation data, and look at how, equities are doing. It looks like we are going to have a soft landing. So that's the consensus view right now. But what if that changes, right? What do you think that's going to do to the equity markets, right? See, the equity markets can cause the Fed to completely change their views, right? If imagine, right, the S&P 500 ends up getting close to 6,000, and it's just rallying and rallying and rallying, because the consensus view is rate cuts are coming and easing is coming. So there's no problems in the economy. It doesn't look like it. And if there is, there's going to be some aggressive rate cuts. So why not buy equities? And that's where you're seeing the aggressive move in equities. You're seeing, gold move up higher. You're seeing Bitcoin move up higher. But what if that consensus view causes the Fed to completely flip 180? What if it causes them to do a rate hike, right? Now, the probability of a rate hike is very, very low. And generally in history, that when you've done rate hikes and when you're in pause, right, the next move would be rate cuts after pausing for some time. But what if equities continue to move up higher and we see S&P 500 at 6,000, economy is still fine, growth is strong and resilient, job market strong and resilient, inflation starts to tick up or it's elevated, right? In Canada, the carbon tax comes in, causes the groceries out there, the corporations to hike their prices, grocery prices are higher, refinancing comes in, mortgage costs, rent goes up, inflation goes up. What do you do as a central banker? So if the cost of everything starts to go up and you're the central bank trying to tame inflation, you're not going to cut, right? You're going to prolong this pause. You're going to cause the pause to continue. And if you really have to, you might even hike. So let's just say the hike is out of the question. So then what do you do as a central banker, right? You continue with quantitative tightening, and if it's really needed, you hike, but let's just say that doesn't happen. So you throw out the idea that 3 rate cuts are coming. Now you make the markets price in 2 rate cuts. And if prices are still elevated, then markets maybe price in 1 rate cut until maybe they realize that there's no rate cuts coming in. What happens then to the equity markets, right? So the equity markets, the consensus view that everybody has, this FOMO that's happening, the exuberance that's happening, could cause the Fed to back off a bit. Now things can get also very political because we've got US elections coming up by the end of the year. Although the central bank is supposed to be independent, the central bank is not supposed to be influenced by the government. You may argue that, there's no influence there. Some may argue that there is influence there. And they may be pressured. And they are being pressured. If you look at even in Canada and in US, you have certain politicians out there sending tweets, sending messages, right? In Ontario, in Canada, you got Doug Ford going on Twitter saying the Bank of Canada needs to cut rates. What about Canada needs more housing supply? How about that, right? Right? Let's point the finger and the blame at someone else and not fix the issues that the governments have been creating, or the government of Canada has been creating, right? Same thing in the US, you have politicians sending mails and telling the Fed's got to stop the rate hikes, got to cut now, right? Political motives, whatever it may be. So there is pressure there. We see it out there on Twitter, on X, on social media. So what happens then? Maybe they just cut rates just for the sake of it, just to get people a little bit calm, that, hey, we do want to cut rates, we do want to ease the pain. So if they do cut rates and they do, 1 rate cut in, let's say, June or July or in the summer or whatever, then they could cut and then pause for some time, right? And then maybe do another rate cut closer to the end of the year. So instead of 3, they may do 2. So they will under-deliver on their expectations of 3. So again, what happens there, right? How does the equity markets react? It may initially get a shock, but then may get picked back up or may get bought back up because, hey, they're cutting rates, they're still easing, and it's possible that first rate cut could cause further exuberance. And if it caused further exuberance, then no need for the 2 more rate cuts. And maybe the pause after that rate cut might be longer. So again, this consensus view that everybody has, people may be shocked that this consensus view may be wrong. And then if once people start to realize that, that may cause shocks and effects in the equity markets or in certain asset classes that ends up making things go worse off. Maybe. But it's very interesting to see that the consensus view today is that easing's coming very soon. It's going to be done. We're going to get a lot of easing. It's going to cause the whole markets to go up, etc., etc. While the central banks are trying their best to convey somewhat more of a hawkish message, saying that we need more data, pushing the idea of fast rate cuts, talking about cuts and then pause, right? And still the equity markets are not listening. So again, the consensus view could cause the Fed, central banks out there, to act in a certain way that will change the consensus view completely and actually cause a shock to a lot of traders out there that could then in turn cause the markets to react in a certain way. So pretty interesting. Let me know what you guys think. Comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye.